Hey guys, welcome back. In today's video, we are talking about calling out Citadel, burying synthetics, the hidden swaps flagged, and many more in this video. First, we're taking a look at this, calling out Citadel. The bigger picture here is clear. Citadel's cries for reform are not about fairness or transparency, they're about protecting their turf. So what this is in reference to is this particular post we've shown in the past, where Citadel's complaints reveal fears of being beaten at their own game. We talked about a series of these articles recently about Citadel calling out, these private trading rooms, calling out dog pool, and the reason why they're doing it isn't because they suddenly are fighting for the retail fairness, isn't because they're suddenly fighting for transparency, but it's because they are losing at their own game. You can see it seems that Citadel doesn't mind a fragmented, opaque market so long as they set the rules and dominate the flow. But if someone else might outcompute them during an overnight session or in an arena they don't yet control, suddenly the SEC needs to stop in. So when you see these articles about what Citadel is doing, this is what it's in reference to, about the fact they are getting beaten in the game that they once dominated, that once made them billions of dollars. Now, this is worrying for them in two factors. As a company, when you're losing your main source of revenue, when you're no longer the domination of that particular industry, then you are obviously going to worry. The second thing is about understanding that right now you're in a period where you are in need of large amounts of money because you have these positions that are all exploding, you have these positions that are all going over leveraged, and therefore you need the money to keep everything still going. You need to finance the positions, finance the shorts, create the synthetics. And so if once the main source of income is now getting disrupted, you can see why they are worried. So this is why recently we've been seeing these articles. You can see Citadel's cries for reform. It's because they are extremely worried. Now, this obviously is indicating multiple things. I'm going to be talking about later on in this video. When we take a look at AMC, you can see 970 AMC shares so far today, where we're looking at still ups, purchasing AMC shares. Now, like I said, the reason why I show this is because this is only a fraction of what the whole, community is doing, right? When we're looking at what everyone is doing with the AMC shares, what the retail, what the apes are doing is, as opposed to selling their shares, we are seeing the very opposite. We are seeing more and more people actually buy into AMC. So when you want to have an understanding of what investor sentiment is, this is the investor sentiment. Now, of course, when you take a look at the price, it doesn't reflect. And once again, we had a 0% movement on AMC. Now, you obviously understand what the reason for this, the suppression that is happening. Remember, we are seeing the Nasdaq, the S&P all up, and we are seeing all of these stocks up. Yeah, AMC is 0%. So clearly we know that they are trying to manipulate, but the very fact that they are trying to manipulate should again bring you back to this first particular post of understanding that if they no longer have that money, if they can't make the most revenue from this industry, from this market, then they don't and won't have the power to continuously manipulate AMC, and that's why they are worried. But again, it's just to show that the investment sentiment of AMC is still very, very bullish, but it's because of suppression we're not actually see it reflecting. And you can see we haven't sold at 80, and now the prime lenders slowly getting nervous. Now, this is also in relationship, obviously, with Citadel. What you have to understand is we know Citadel is over leveraged. We know they're worried about their positions. We've already talked about that. What you also have to know is that there are multiple other companies who are worried about these exact positions as well. We obviously have their prime lenders such as Bank of America who are extremely worried, and especially when we take a look at the swaps later on in this video. So this is why you have to understand that this is the time they're trying to manipulate AMC the most, and is why we've been seeing AMC moving 0% for so much recently, because this is the time they need to double down. When you take a look at the fundamentals of AMC, what you can see is that the AMC balance sheet, total assets equals 8 billion, total liabilities equals 9.7 billion. AMC total stockholders deficit equals 1.737 billion. 8 billion assets minus 9.7 billion liabilities equals a 1.7 deficit. Very thin margin that can be easily reversed by getting rid of debt and turn that deficit into total stockholders equity. Debt situation turning around, I think AMC will lower capital expenses to focus on profitability and putting the assets invested to work. So this is first, you have to understand that as a whole, this is where AMC is at with the fundamentals. So we know where the problem is. Now, is this a massive problem? Of course not. Is this easily able to get finished? Of course, yes. That has always been the case. And I will talk about why that also reflects to the AMC price going down as well. And so when AMC is obviously able to turn this deficit around, when they're able to obviously pay off the debt, pay off these things, that get rid of liabilities, that will obviously put AMC in a very good position, and is why we talked about lowering capital expenses and of course putting assets to work. But to talk more about why they always feel the need to suppress AMC. Firstly, we're looking at a 1.7 billion deficit, which again is still a lot of money, but it can easily be earned by AMC through multiple different strategies. But one big thing, and it's about why we are seeing AMC getting manipulated, and is why this is how GME have put themselves in a very good position with financials. And we talked about this before, but it's obviously with share offering. Now, before you click off and think I'm talking about AMC should do a share offering, that is not what I'm saying. However, what I am saying is how they are afraid of AMC, how institutions are afraid of the power that AMC has, along with GME. Because if they know, if they don't suppress AMC, if AMC went to $20 and even higher, because that's where AMC's price should be, and AMC were to do a share offering, they could easily raise hundreds of millions, if not billions of dollars. And that's what they are afraid. And again, when AMC is able to raise that amount of money, they can either invest it, which gives them an even bigger return, or paying off the debts, paying off the liabilities. And that's what they're worried. They've already seen this with GME, is why we see GME has billions of dollars, and they're scared of AMC to do the same, hence why this is also another reason for why they're suppressing AMC. But precisely from that, you can understand just how worried they are and how scared and how much they respect not only AMC, but the apes as well, because they understand our power. Now let's take a look at this. And this is something that is extremely, extremely crazy, because what we are seeing is call to action, stock market fraud from being locked into law. So what we are looking at is that Wall Street is pushing the DTCC rule, which is, for those of you who want to obviously take a look, and it's a dangerous proposal that will turn financial crime into policy. It allows broker-dealers to bury synthetic trades, rehypothecate counterfeit shares, and operate in total darkness through venues like FINRA, XADF, OTCBB, OTC, and OTC UTP. FINRA is not just the regulator, it's the player, the referee, and the scorekeeper. So this is what they're trying to do. Now, we've already talked about just how screwed these short sellers are. Everyone has seen, and we've all talked about this. Now, we've come to a time where finally the regulations are starting to realize as well how big these situations is, how big these positions are, and just how much risk it carries along with it, and how it could easily crumble the entire financial market. So it seemingly looks like they're trying to give these shorts a way out by obviously allowing them to bury these synthetic trades, to rehypothecate counterfeit shares. But we obviously know that the only reason why they're doing this is firstly already proving the fact that shorts are getting out of hand, right? Or they already gotten out of hand. Secondly, they are extremely worried about these positions. And then finally, the shorts can't keep it up anymore. Hence why they're trying to run to the regulators and asking for forgiveness. But like we said, these things, whilst they can make rules that could hide these away, I definitely don't think it would be a everlasting thing, because they talked about how they could last forever without any rules, and we've already seen how that isn't the case. 2 years ago, they thought it would be over. 3 years ago, they thought it would be over. A year ago, they thought it would be over. But we are still here fighting. We are still here strong. And that's why they're worried. And you can see retail loans get allowed. Submit your comment. If no one complains, this rule changing and enshrining fraud will be allowed. So this is the purpose of this video as well, to obviously let everyone be aware. As always, none of this is financial advice, so do take guys are going to sell. Make sure to do your own due diligence and research. Make sure you also look this up as well and then make a decision for yourself. But of course, if you don't like what you're seeing, you can be vocal about it. And I strongly recommend as well to obviously for anything in life, you know, be vocal about it, but make sure you do your own due diligence and research first. And now we're also saying the shadow banking system is a black box of hidden swaps, TRS, convert hedges, unseen until they detonate. Barron's just flagged it. If systemic pressure forces an unwind, GME with 6 billion cash, no doubt, and no token exposure isn't just surviving. So we're talking about how they're talking about the risk lies in the shadow banking sector. But again, this just goes back to what we talked about earlier with this particular rule, is the fact that they know it already. They understand how big the situation is, and is why they're trying to let them get away with it. But yeah, guys, thanks for watching the video. I'll catch you guys next time.